Hello, welcome. Oh, sorry, my desk is like a little wonky. I'm standing today because, you need to stretch and do all the things. Anyways, hello, welcome. Thank you for joining. Today is a Friday. We are going to dive into some financials. If you don't know, my name is Jen Shaw, and I am the owner of All Accounting. We are an accounting firm that specializes in construction companies that are typically doing 500,000 to 10 million in revenue. And we like to spend these weeks just to kind of dive into certain topics, kind of make you think about things in your business to reflect on to get you to the place that you want to go. Finances sometimes are just this jumbled mess and it can be really confusing. So we just like to take some time each week to help you understand it because we really feel that when you know your numbers, you can own your future. I'm going to highlight a in-person conversation that I had a couple weeks ago, and I had the opportunity to work with AGC. They're a fantastic company. If you are not part of them, a little plug for them to go and check them out. They are a great resource for anything construction related, state projects. They hold a ton of conferences. They have speakers like us to help you understand things. We had a banker that came to help you understand the loan process. They did connections with different software that's out there for construction companies, a lot of employer resources for your employees, staying on top of things. Anyways, I'll be done plugging them. But I'd like to talk to you today about profit and loss comparisons. So give me a moment and I will share my screen here. All right. Profit and loss comparisons. So this is a great opportunity for you to reflect on what the heck you have going on in your books. I think that a lot of times there are reports that are sent your way, and sometimes a stagnant amount of numbers can be beneficial, but when you compare them to this or that, you really get more context of what's actually happening within your business. So, some ways in which to do that are going to be timeframes. So, looking at a year over year is really going to help you look at seasonality, especially with construction companies. Wintertime is in most of the country, or at least in our Pacific Northwest, has died down, and so you don't have a lot of work going on within the winter, but more in the spring, summer, and a little bit of the fall. And so when you're looking at the year to year, you can really bring all of that together with the seasonality of it. I also really love to see like this past month of June compared to last year, June, because again, you can see really that face to face of what was happening. Each line item, did you increase your revenue from last year? Did you consolidate some of your expenses and help your projects so that you have less cost? And just really drilling in to see last year versus this year. And then when you look at a quarter to quarter, that is really going to show you more of momentum of you've changed this thing in your business. Has it actually helped? In construction also, sometimes it is a little easier to see it from year to year, but it's really just the analysis of not sticking to one stagnant month, but choosing a time period and looking at different things. And then, of course, if you can get a little broader, if you can do a quarter at a time or a year at a time and look at the previous year or the previous quarters, it will get some of that wonkiness that happens just naturally within a business. So if you have a lot of data, let's say you've been in business for 10 years, that's wonderful, because then you can really get the trends and flows of just what happens over time. I think of it a lot of the times like a stock market. You don't want to look at it on a daily basis because things can swing back and forth. Same thing happens with your financials. You could have a payroll week, and so there's going to be a lot more nuances in there. Or maybe you threw out some bonuses at the end of the year that inflated December for expenses. So looking at just a time frame instead of just one singular item of did I do good this month or not, because it really brings that context in it. We've talked about this before, but I also love common sizing. What common sizing is looking at each line item as a percentage of revenue. So this helps again with the seasonality of things, because even though one month maybe you did $500,000 in revenue, let's say that was June, and in January you did $100,000 in revenue. Okay, well, obviously June must have been a really great month, but it may not have been. When we put that common sizing, it gets rid of just numbers as a whole and turns them into comparable items to really help you, again, with that context of choosing what does this one look like over this one. Okay, so some things to look at to help you explain what actually happened within your profit and loss and the seasonalities of things is just reviewing your gross margin, making sure that this is all tied in together. So what is gross margin? This is going to be your direct expenses and sales. So this is going to be direct labor. It's not your administration in the office doing invoicing. It is that laborman who is constructing that wall to help you build the structure. Your materials, again, direct materials. It's the lumber that goes into that wall. It's not the office supplies to house things there. So looking at your gross margin on a regular basis and making sure that you are estimating and invoicing as best you can. Overhead load, this is where you're going to look at your administration and overhead expenses. So this is your overall insurance that you may have, or your overall administration labor that you have, the rent that you have for storing your construction items. This is looking at those separately is really important. And then as you compare things, you will also be able to make some better owner decisions. So if you're looking at your profit and loss and you can see that when you have last year's information and this year's information, and last year's net income was 500,000 and this year's net income is 1.5 million, well, we need to start doing some planning. We need to look at, are you making enough tax payments for your federal or state estimated taxes? Can you pay off some debt? Do you need to reinvest the money? But without these numbers and without the comparison, we don't want to just do what we did last year or do what we did last month, because things are constantly evolving and changing with what you have going on in your business. So it's really taking your numbers, looking at them, comparing, and just always analyzing that stuff. I will jump very much ahead to the last little spiel. If this still is also confusing, or if you don't even want to do it, you just want someone to help and help look at those numbers and really dial in things, we are happy to help. We are taking on clients. We love to deep dive and explain these things and just make them more manageable for you. So our contact is below, and I really hope you have a great week. I hope you can take some of this information, play around with your own numbers, or again, if you just want some help on the other side, we are here to do that. Again, my name is Jen with All Accounting, and we'll see you next week.